Is there anybody out there that doesn't have some gold or silver in their account? If you don't, I think you don't have good friends. But I'm here to be that good friend for you because these commodities have been going nuts. But the purpose of this video is to show you 3 ETFs or some silver and gold ETFs and some silver and gold stocks that can help you bring up your account by around 15%. That is a big claim, but by the time you finish this video, you're going to see why. Stocks and commodities move together. There's nothing that moves alone. They are all codependent on each other. So the reason gold and silver is moving is, of course, because of the dollar. But if gold is moving, silver is moving. If gold is moving, that means stocks that mine gold are likely to be moving. They don't always move together, but many times they do. So as we can see here, gold already had a big move that I profited from. Of course, I just bought the ETFs because I can just buy gold bars and keep them in my house. That would be crazy. The sad news right now is that the silver ETF is a bit late. I already bought it. I should have made this video earlier. I already bought it here. I wouldn't buy it right now because I'd have already missed the move. These are gold miners, so these are stocks. This ProShares tracks silver, but we can put silver miners here just for you to see. Silver miners, silver, gold. Okay, so we can see that they always move together, but not exactly together, but like together. So let's see. 2nd February, gold is moving up. Gold miners don't move up as much. And then gold moves up way crazy compared to the gold miners. Silver does the same thing. They're all moving together. Why do they move together? They're all commodities and they're similar to each other. Okay, that being said, let's look at the gold stocks. So my favorite one is HMY. I kind of know these stocks in my head because I just do it a lot. Another one called Ego. This one kind of broke my ego sometime because I made a loss in it. But AGI, ooh, this one is beautiful. There's AU. AU has not been that beautiful. But let's look at a silver stock, PAS. This one actually I bought it too. How did I know when to buy these things? I'm going to show you. Because you see, they all move together. So here around 4th March, Ashanti Almost Gold was moving. HMI was moving. Ego was moving. PAS was moving. Is this a surprise? No. Because when you look at the ETF, they all move together. So this one went up 9 times our risk. So if you put in $100, you made $900 on that. But anyway, let's not talk about the past. Let's talk about what is likely to happen in the future so that you can make your money. So right now, these 4 stocks that I'm showing you are the stocks that I think are going up. So which one should you get in? PAS, I would say it's a bit late. I already went into this thing and my risk is now here at around $15, $19.15. That one is late. AGI, it's also late. Like we want to get it while it's just breaking out. We want to get it on this 2 red days here, this green day here. That's when we were supposed to get it, but we missed it. But the ones which I really think might be good for you is actually HMY. Here, it has not yet broken above the highs. It's extended, but it has not broken above the highs. Ego is looking the best. Oof. This one is just perfectly positioned right now. I would just buy it straight away. Of course, my risk is always 1.5 ATR, and that is around 5%. What I'd normally do is, so I'll show you how I enter these stocks. So after I risk this, I know that after such a consolidation, it's likely to go up around 5 times the risk. We saw here that this one went up 9 times the risk, but that it's not that common. If we look back here, like at this past, it only went up 5.4 times. This was just a huge move. That's not normal. It's called the third wave, by the way. But yeah. By the way, if you find this information interesting, subscribe to the channel. I'm going to be teaching you technical analysis. I also want you to subscribe to my newsletter where I'll be sharing all of these stocks that are breaking out for free, because I go through the stock market every day for around 2 hours. So I always know which are the hottest stocks and which ones are going out. So you'll be getting them all for free. I'll be teaching you technical analysis here. I'll be providing a service later in the year where I'm teaching people how to trade stocks. But for now, it's all going to be free until that service gets out. But everything on this channel is also going to be free. So I want you to subscribe so that you can boost the algorithm and boost the channel. You win, I win. So let's do it together. So yeah, as we've seen that we only have 2 stocks that are ready. So let's see how you can squeeze yourself into this ego. So it's extended right now. And if you were to see, our stop would be above the 10-day. So what I do is I just count so I see my 1.5 ATR, which is 5%. So I'll just do 6% and I draw a line there. And I draw a line halfway to that line. I'll show you why I'm drawing these lines. Okay. So one way I can do it is by either risking 0.4% of my account, or let's say I have an $8,000 account. What I normally do is just divide my account by 8. So that's going to be 1,000. And then for that 1,000 that I can buy this ego stock with, I now further divide that into 3. So that's going to be around 330. So I buy my first 300 right here at 16.12. This is my stop, 15.27. Once the stock hits here, I buy the second tranche. And now I have 600 total in the stock. I keep the stop original. And then once it hits the third line, I buy the third one. So that by the time it's past these 3 lines, I have a total of 1,000. Another way you can do it is just by risking 0.4% of your account. So let's say your account is $5,000. You risk $20. So you put $20 there. Yeah. So put $20. So $20 would mean if you type in 20 here, it will tell you how many shares to buy based on your risk. So 22 shares you buy here, you buy another 22 here only once it hits that price. And then you buy another 22 here. And then for the selling, what I normally do is, so if I have 3 positions here, like I have 22 shares, 22 shares, 22 shares. Once it hits 5 hour, I sell the first third. And then the other 2/3, I just let them ride until it forms 3 red bars. Like you see here, it forms 3 red bars that close below the 10-day moving average. So what would that mean? So let's say I bought it here. I wouldn't have sold it. I'd have first sold the first one at 5 hour. I first sell a third one there, 1/3. And then I would just write this out, and I would have waited for 3 red days that close below the 1, 2, 3. Okay, this one didn't close. So I just wait. And now this is the third one. I'd have sold here around for 7.5 risk, because it's almost impossible normally to get the whole thing. But that's how you do it. If you like this video, of course, you know what to do. Watch the other videos on my channel. The channel is pretty new, so there are no other videos. Surprise. But yeah, subscribe and support the channel. I hope you can make some money. I'm going to release 3 videos. It's because I'm going for a trip. I want to release them before Monday so that everybody has time to see these videos and knows what to do when the bell rings on Monday. I hope you have a wonderful long weekend. Canada, it's Victoria Day, something like that. And yeah, may the market be with you.